Magandang Sabado.
Magandang Sabado.
Magandang Sabado. Yes,
Hey
it's a
guys.
beautiful Saturday, and here we are in the middle of a hot summer. Okay, I am joined by Adam Criticos of the Criticos Group with Cross Country
Hello.
Mortgage. You're gonna break down that 5 mortgage myths, right?
Yeah, we're gonna do a little bit of conversation about it too. Okay.
Okay.
So
Okay.
we're gonna talk about it and
Yes.
all the myths. Okay.
Yes, I can't pronounce that word. So this matters because many buyers are not saying no to home ownership because they know they cannot buy. They're saying no because they're assuming that these things are what it is. Okay, so let's just like jump on in, on the very first myth. But before that, why don't you introduce yourself? Tell them about your background. Tell the listeners, you've been such incredible partner, for our radio show. We've been doing this for 9 years. But give everybody a little bit of a introduction of who you are and how long you've been doing mortgage.
Yes. So again, my name's Adam Criticos. I'm with Cross Country Mortgage, and I have my own team, the Criticos Group. I run my own branch. I've been doing mortgages for 23 years, so I'm 45. So at this point, half my life, which is pretty wild. I have about another 20 years left in me, I think.
More than that. Yes.
Well, left in the mortgage bit. No, I'm kidding. But my mindset has always been education, and creating wealth through real estate. I've had the privilege of being able to, create millionaires with some of my clients by having them get into the right properties with the right structure and build wealth with the appreciation and paying down debt. So I love what I do. I got into it because I see my background is in finance and investment banking, and I see how great a mortgage is when it comes to using leverage to purchase real estate. And that all started when my father and their family moved here from Greece. The first thing they did was buy real estate as immigrants, and this was back in like the 60s when you could buy a 4-unit building for $70,000, and that same 4-unit building is now $2 million. And
wow.
Yeah.
And that's what you mean by you've made millionaires.
Well, that's just an example. I mean, we've seen the last 4 years. I mean, we've seen how people buy homes for 500, now they're worth 1.2 million, right? And then they sell that property and they buy their next property.
That's right.
So, but mortgages is a leveraged asset. You buy a house for $1 million, as an example. You can put 10% down, so you're only putting 100,000.
Well,
as
let's
an
start
example.
with that.
Yeah.
Okay, let's start with the first myth, which is almost everybody has heard, I need 20% down.
Oh, yeah.
I understand where it comes from. 20% down can help avoid PMI, that's private mortgage interest.
Correct.
In some cases, create a strong equity position and a lower monthly payment. But the mistake is when people hear 20% and think, I don't have 20%, so I cannot buy.
Yeah, and you're right. That's what in our generation, I'm Gen X, so and almost a millennium, but it was, our parents, they bought houses, they got a loan from a bank and they put 20% down or more. Well, now with PMI, with FHA, with all these different programs, you can put, we have options that you put no money down.
So
right?
let's pretend like our listeners don't know these acronyms. So PMI
PMI is private mortgage insurance. It's probably one of the greatest inventions of in the mortgage market because it allowed insurance to, you basically are paying, when you buy a home, you pay extra insurance if you're putting less than 20% down. So that way us as the lender and investors, we can cover any losses if something happens,
somebody
God forsake, defaults on the mortgage. Usually it costs about 20 to 30% of that property value to go through the foreclosure process and sell it. So private mortgage insurance is an insurance that you pay as part of your mortgage payment that helps cover that if something happens with that loss. So then now, instead of you having to put 20% down to get financing, you can put as little as 3% down as a first-time home buyer and pay mortgage insurance.
And using FHA, which stands for?
Yes, Federal Housing Authority. So
Federal
that's a
Housing
part of HUD,
Authority.
which is a, it's the government-backed loan. So they have their own, they call it mortgage insurance, which it's not private, it's, public because it's through the government. But that allows you to only put 3.5% down. And so this myth, and this is where leverage comes from. This is why I'm so passionate about real estate, is because instead of you having to save for 10 years to put that 20% down, you don't have to. You can then buy that house and instantly starting to build equity.
And you said this is a myth, but why do so many people still believe that they must put 20% down? I hear it still all the time.
I think it has to do with just the way that they're like old school way of thinking.
So
That's the best way of saying it. Like, the more money you put down, the lower the payment, the higher you can qualify. But that's not the case. You don't. If you're focused, we focus on budget, we focus on building wealth, and if you just focused on that, it doesn't matter if you put 3% down, 20, 50. If that budget, if that payment is something that you can afford and you're comfortable with, then why put more money down? You can use that money for other things.
Well,
Even if you have 20% to put down, you can use that money to buy furniture, to right. So you don't
instead of going
yeah.
on a 24% debt, let's say you want to buy furniture and you're putting it on a credit card, and the credit card is 24%, right? And what you're trying to do is you're putting 20% down so you can avoid that private mortgage insurance, but then you're going to go and use the credit card and pay 24% interest, where you could have just like avoided that by paying cash, but you have to pay a private mortgage insurance, which is how much is usually private mortgage insurance when you're not putting 20% down?
It depends on the down payment. It's a risk based. So the highest PMI or private mortgage insurance you're going to pay is when you put 3% down, because you have to have the highest level of coverage to cover that additional 17%.
The less you put down, the higher the interest
Correct.
rate. The interest rate is because the higher the risk of the
Well,
PMI.
It's the interest rate isn't the risk. It's the higher the private mortgage insurance, the higher the insurance you pay.
They're charging you.
Correct. And so
Right.
that affects your mortgage payment, and it affects what we call your APR, right? Your APR is your annual percentage rate over the life of your loan, including closing costs and then PMI.
So some people do not understand the difference. There's that APR rate and the interest rate, right?
Yep. Your interest rate is the interest that you pay on the mortgage that you're borrowing. The APR includes not only the interest rate, but the cost of the PMI on a monthly basis, and then any financed cost over the life of the loan.
Okay.
And there's also, a lot of different factors about, if you, let's say, are planning not to live in this house for more than so many years, you're gonna leave anyway, right? And so maybe it's cheaper to just put a very small amount of money down. So what have you done an analysis on that? It's like, how many years does it make sense to actually try and avoid that PMI?
Well, it depends, because you can always refinance out of the PMI.
That's true.
Right?
That's true.
You can pay down the principal, and after 2 years you can get the property reappraised and eliminate the PMI.
Except if you get a
FHA
loan.
Correct.
So that's the only thing, is if you
Yes.
have an FHA loan, you cannot get rid of that PMI.
No.
Ever.
Unless you refinance out
Unless
of
you
it.
refinance out of it.
Yeah, and if to get super technical, I think if you put 10% down or more, then after 10 years, and then same thing like if you did a 15-year fixed mortgage on an FHA loan, but that is a very technical, specific scenario.
But let's give a shout out to our veterans, because
Yes.
private
Yes.
mortgage insurance is not paid
Correct.
for veteran
Yep.
loans.
So thank
even if
you
you're-
for all of our veterans listening.
yes.
We've helped out. I myself have done over 300 loans for VAs in
for
my
VAs,
career.
for veterans,
Okay.
yeah.
Veterans in my career, and there's zero money down with no PMI. So
Yeah.
it's one of the benefits, which rightfully so, we should be able to help with
give that
ownership.
benefit to someone
Yeah.
that's like done a lot for their country,
Yeah,
right?
My background is finance, and so I look at it as a number and a return on your investment. If you're buying a property and you put 3% down, right, and that home goes up 3% per year appreciation, that's the average in Cook County for the last 65 years, then you're getting 100% return on your investment every year, right? Compared to if you're putting 20% down, well then now, yes, you're still getting a better return. You're still getting a good return on your investment, but it's 15% instead of 100%, right?
Right.
And so, so those are the things that we look at when we talk to clients, and we say, okay, you might have 20% to put down, but do you need to put it down? And what are your goals? Because if you're going to buy, let's say you're buying this house for the next 5 years, and then you want to invest, buy another house in 5 years. Why are you going to put all your money into a property? Why don't you continue, put the little minimum down, so that way you have that cash available for your next purchase?
All right, put a pin on that one.
Yeah.
Because we're gonna go talk about something fun.
Yes. Instead of those rates and everything, let's talk about festivals, food, and culture. Let's launch our summer weekend with a block party packed with flavor. The Taste of Roselle takes over downtown Roselle on Saturday, August the 1st from noon until 11 p.m. and Sunday, August the 2nd from noon until 8 p.m. So head on down to Main Street and Prospect Street in Roselle for live music, delicious food, bingo, arts, crafts, and a children's carnival. Admission is free with food and carnival activities available for purchase. So gather your crew and bring your appetite.